Good evening, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a strategy of the day update here for August 22nd, 2023. We're going to be taking a look at the corn and soybeans in particular tonight. Kind of just a quick video updating us on where we are in crop tour. We've got our very own chief market strategist, Ted Seifried, out in the field right now. On the eastern leg, just going through Indiana and into Illinois here today. So getting some interesting numbers back from the tour on where pod counts and corn yield is. And if you are interested in hearing more from Ted about that, do check out in the comment section information of this section video. Sign up for our daily call with Ted Seifried and get up-to-date information and his market as well as the Zaner Ag Hedge viewpoints on today's market updates every day there on a daily call with him. So check that out if you're interested. Soybeans, let's begin with a daily chart here of the November contract. We're really just focusing on new crop at this point. We're into weather markets now. We know over the next 2 weeks we're going to be experiencing some heat, some dryness. That stays there. I think what we're hearing from Tour right now, which is okay, good bean counts, except for Nebraska. The potential's there, or pod counts, I should say. The potential's there, but right, if we don't finish this crop, there is the concern that with just heat and dryness, there isn't residual moisture to carry things through and to fill pods to the best of their ability. So I think that's kept the bullish undertone over the last few days here into crop tour. We gapped up on the week. Then for the last 3 days, we've traded some back and fill price action. After breaking above the 200-day moving average and the 18-day moving average there last week, we've basically pulled back to test them as support. We have the 18-day and the 200-day and the 55-day all there right around 1325 and 1331 for the 200-day. Clutched together. The 100-day is still below us down at 1393. I can't, rule out a pullback down to that level. Retest of that August 9th low. It's all in the cards, or could be, in the works. But, failing to break out of 1380 again, getting back to that gap fill. We'll look at that in a minute. We've got a neckline down here around, 1290 or so to 1250, wherever you want to kind of draw it. We go back down below those levels. We open the door for a test down to $12 and below. I'm not saying that that's going to happen just yet. I think that with dryness over the next couple of weeks and the demand we're seeing for beans, and then the kicker in the hole would be if the dollar could fall too. I think we could see a real turnaround in this chart, and the beans, could be heading higher. Weather markets again continuing, and then of course, for the rest of the crop tour, I think it's worth to be said here, and this is something that check in with Ted daily on that daily call. I think that there's something to be said for potentially the market going into a back into a weather market. But again, I guess I was going to say potentially for the rest of tour, continuing to find disappointment in the pod counts would be, I think, key at this point. So far, though, that's not necessarily what we've been seeing, and that's something that I think we need to be hyper aware of at this point for our market. So on the smaller time frame here, let's go down to our basically 4-hour chart, because soybeans at this point I think are trading a very near-term trend that we can look at and capitalize on. And remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trading recommendation. But again, get in contact with us there. Information on the bottom right-hand corner of the screen to get in contact with me. And of course, here in a minute, we'll take a look at how to sign up for that Ag Hedge hotline. Soybeans on the 4-hour time frame, I think we are still building in a bull trend. We are holding some levels that I think are pretty important. We pulled back now into the 1282, full 50% retracement from that swing from 1130 up to the 1435 high. That pullback was pretty steep, but right down into support. We now have 2 new trend lines against lows there that we can continue to watch for, and so far have proven supportive as we formed a base here from the August 7th low. From that low, we rallied up in the soybeans to close that open gap there that we left on the gap down on that Sunday to Monday on August 4th. Close that gap. That's when we kind of held, very rough 50% retracements. There was an initial 50% retracement that held. We then had a WASI day that kind of whipsawed. Take that WASI day out of the charts, and we basically held above $13 in that 50% pullback, went to and through targets. That's great. It's a good look. In doing that, breakout, we ran up, had a bit of a gap up in the beans. That gap up closed our other open gap up at 1380, hit the negative, or hit the 618 line of that swing from 1435 highs down to the 1282 low. And excuse me, after that, I immediately, as a technician, I dropped from the low here at 1280 to in a quarter up to 1381 high. That $1 move. It was a 50% pullback at 1331, and you know what? It kind of looks like this 3-day pullback has now pulled back into that supportive area. I'm not saying we won't get a test at 1331 or even go below to test these upward sloping trend lines against the lows as now support, but I think a break, a move back above this downward sloping trend line against the high and a break of the 15-minute trend lower, which we can look at, would also constitute a reversal. So we find ourselves in a series of Fibonacci measured moves, or kind of stair-stepping lower, two steps forward, one step back, 2 steps forward, 1 step back, 2 steps lower, 1 step back, and we find ourselves now in a move that is drawn from this 1366 anchor high down to this new low. 1351 is the 50% with 1355. So I'm not saying that you should sell it in a rally there, but technically speaking, it is in a downtrend right now with a downward sloping trend line against 1360. Okay, it's going to be around 1355 soon. Anyway, from the highs to a low after here, around 1354, we can find the 2 steps forward, 1 step back. First 50% swing that holds. That 50% swing goes to its target of 1347. So from the old entry low highs to the new swing lows, we dropped the next in the series full 50% retracement. We should also be considering the full or an anchor swing low to low here. Generally speaking, we get back above 1347, and if there's a 50% pullback after that, at some point here there will be a 50% pullback that I want to buy. I would like to have seen this market trade into 1331 here. That's also, again, testing these old highs in the market now, broken resistance as support before potentially heading higher. So I think there's a lot there for why soybeans pulled back technically like they did. I think we're trading technicals here, even though we have some crop tour estimates today. With pod counts coming in nearing 2018 tour highs in Indiana, and the lowest on record, or at least since 2017 for Nebraska. Right, we have things all over the map. So we'll continue to monitor that and watch that situation unfold. So, all right, real quickly now, corn. There's not as much left to say about the corn period. The daily chart, it seems to be we're still fighting, and honestly fighting to break below that 480 to $5 kind of supportive area that from May of 2023 through June and July was support, and then here in August and into September, well, it looks like we're trying to break below it now. Well, September is still a couple weeks away, but you know what I mean. Into the end of August. 18-day moving average held as resistance there into this week. We went up to test it. We thought we were going to break above it there to start the week, and we just faltered and fallen back down in a swift outside day reversal lower, but not really seeing much momentum or follow through here. So if we do break above, the prior day's highs here, 45, we get back to that 18-day moving average at 481 and not 491 and above it. Okay, I'll start talking about a reversal in corn, and really back above 507. That 3 high here, 1, 2, 3, back above that level, really opens the door to the 55-day and 100-day moving average up around 524 and 529 respectively. And again, for another test of that 200-day up at 560. Those are just your reversions to the mean over the last 200 days, could take us up there. And again, we are basically in a big range between 570 and 480 right now. There's a dollar range for December corn still. Like, we're just at the low end of that range still. Not in oversold conditions, and I would expect to maybe see that come back up here, but we shall see what happens here for December corn. On the shorter time frame chart here, the 4-hour chart, not as much again here to say. There's an open gap up around 531 still. Full 50% retracement of the whole swing lower is at 522 and 3/4 there. It's also right about the highs of August there at 523. Open gap again at there at 531. You can see the downward sloping trend line against the highs that comes in around that area. We're still below this kind of battered down downward sloping trend line that it looked like we were gapping up to start this week, and then failed and broke back down into this range. So of course we go back down to test the range low. We hold it. We've got a double bottom going on. And that's why back above 485 now, that takes, you know, us could take you right back to $5 to 510. And then above there, now you're really talking about a reversal. And then I'll get really excited about corn. But for right now, we got a market that's kind of holding below 480. You know, it is above 40 right now, but you know what I mean. Like went below it. We're up testing what could be broken support as resistance now. That doesn't look that great. And on a 15-minute time frame, there's not much to sink our teeth into either here. Things are just heavy and really battered down, and we're trading and waiting on news here from our from Crop Tour that you know, this is not really our. At least it's, you know, not up to me to go and bet on the outcome of an event, right? I'd rather watch to see how they come out statistically, and then, you know, see if that fits with the balance sheets and everything else that I happen to be monitoring. So again, check out that Ag Hedge hotline here. Want to get in touch with and hear from our Chief Market Strategist and VP of Zaner Ag Hedge, Ted Cypher, who's out in the field right now, giving us on-field and from the field updates from Crop Tour 23 on that eastern leg. Ted is one of the analysts on the tour and checks in daily with our daily Ag Hedge hotline, where you can sign up to gain access to the call, dial in every day, check out what he and our team have to say. This is in lieu, you know, there will be a newsletter and formatted and everything from this, but generally speaking, we felt that this is the new age and a new way of putting ourselves out there for people to hear what we have to say every day without any real you know, from anywhere, right? Even without the internet, just a cell phone call away. So check that out here. You can find that at info.zaner/introducing Ag Hedge hotline. Of course, the links are in the comment section, information section of this video. Thanks for joining me here for the Strategy of the Day update for August 22nd. I'm Dan Hussey from Zaner Ag Hedge. You can always get in touch with me over here at Zaner, 312-277-0110. Find me, Daniel Hussey Jr. on Twitter, Dan SOT right here on Facebook, or shoot me an email, dhussey@zaner.com. Have a great day, everybody, and we will be back with you as price action develops. Take care, everyone.